Right guys, so this video I will be showing you the part 2 of the Fibonacci retracement strategy, and here you will be learning the settings, techniques and how to be using the Fibonacci retracement. The first one I did on the mobile, and that one was a bit off because the quality and the screen was so small and all that, but this one I will be doing on the PC and you will be seeing better. So just stick to your seats and follow me. Don't forget to like and subscribe to my channel because it's becoming dope stuff out. Just remember that.
So right guys, as I said, let's hop into the charts and find out what this Fibonacci retracement is all about. Also finding out the importance of the extension levels of this Fibonacci. So I'm just about to go into trading view. Signal is a bit slow, man. Okay, let me just go here by GJ. I'm gonna show you examples by GJ, GBP, JPY. This is GBP USD. Let's go to GBP JPY. So yeah guys, don't know if you can see now. Let's zoom in. Yeah, this is the candle in here. Okay. Yeah, this is a trade I took today. Got out about here. Spanked about 2%. We got out due to this consolidation here. That's why we got out. But we knew we were gonna get the retest here somewhere on this level. So see here we draw the fib. Like so. You can just see here we just stepped into that golden zone with this big rejection of this on this moving average also. Then we just took a trade now earlier. Yeah. Just zoom out. You must always zoom out in the charts. Look left and trade right. So as you can see what's happening here, why we took the sell is all because of this looking left. This trend line break we got here. You see, and because of this point of interest level here we have this blue box acting as a resistance twice, resistance thrice, third time. We actually got the entry here this morning, but we got stopped out with a tight stop loss. And then we got the entry earlier here by the break of the moving averages, but we're anticipating this move to come up till here, as you can see here by the extension 618, but we're anticipating to come to this zone here. So we're gonna take profit there and a stop loss here on top was 17 pips. So currently we're moving on this trade, as you can see. Moving on the straight, but right, let's get into it. So first let's explain to you the Fibonacci how it works. So if you go on your tools, if you go here by your by the third tab, and you just open it, you see Fibonacci retracement, you click on it and you open it up. Alright guys, as you can see, we got the Fibonacci here now. Here we have the Fibonacci. So the Fibonacci want to pull from the swing low to the swing high, looking for uptrend, and for downtrend from the swing low, from the swing high to the swing low. This is for downtrend. As you can see, from the swing high to the swing low. There you get your rejection, your retracement. This is the retracement, this is rejection. Sell off here to take profit. Right? So let me just explain this. So Fibonacci you have a level which is a 1. You got your 0.786. You got your golden zone 0.618. You got the 0.5. You got the 0.382. Then you got the node level. Then you get the extension level 0.27. And your take profit level 2 0.618 extension level. So the Fibonacci works like this. Say if you're in the trending market and the market is trending up, making higher highs and higher lows, then your duty is to use the Fibonacci tool, and as the market is trending up impulsively, and comes down correctively, it's a bit sketchy, but okay. So just remove this. Alright, so say the market is trending up, then you pull your Fibonacci from the low to the high. As you can see, you pulled it from the low, this level here, pulled it, the market was doing this, then we pulled it to the high, then we wait for the retracement to enter the buy here, and that buy will take us all the way to our extension level, take profit 1 level and a take profit 2 level. And for the downtrend, just the opposite. So say we're trending down in the market, right? Making lower lows and lower highs, trending down. And we come up for in the corrective manner, sell off. Then you want to pull your Fibonacci from the highest point, the swing high actually, to the swing low, like that, and wait for our retracement. Wait for price to retrace back and reject this level here, this golden zone. You see this 618 level, this golden zone line, this yellow line. It's called the golden zone. It's a high probability for the retracements. This area here, make it yellow. That area there, you see. Then you can take the sell off, you get the rejection in a clear confirmation. You can't just use the Fibonacci alone, you have to have other confluences also to help you get a higher probability setup. So this is a game of probability. That's for downtrend and uptrend. So I'm just going to show you on the charts, on the price action, how it looks, what to look for and what not to look for, and how to use it, and how to use the extension levels as take profits. So as you can see on GJ, currently moving nicely in profit. As you can see, this candlestick here, if we get the break of this zone here, we clear to take profit. But nevertheless, let me just show you the Fibonacci. I'm going to show you some on last week's trade I took. So as you can see here, always start on my higher time frame, daily and the 4 hour. So as you can see here, we had a nice price movement. We had a nice price movement here in this channel. autofocus now off. We had a nice price movement in this channel here. I think I had it like this. Something like that. It's not gonna make it so movie, but yeah, so you can see what's happening. So let me just remove this. Oh shit, go. Just move that smooth average. Could move clear. Take away all that noise. So yeah, as you can see here. Right, so what happened here is this is on the 4 hour, right? As you can see there. This is on the 4 hour. So on the 4 hour we could see that price moved up from this week, the rejection weeks. Price moved up nicer, but it just reject this week here with these rejections. Okay, it was a nice impulse candle, then came down in a corrective manner where we went right where we went and went with lower time frame, the 1 hour, and we could see and you can see what I saw. So what we saw here is that 4 hour nice impulsive candle, and we came straight to this area of resistance. We price tapped into that area, and we knew that sellers was here in control. Here's the bigger players in control, as you can see here. This moves down. This moved down. Yeah, this was that news, but this moved down here. You can see how many that the big players was involved here. So we as retail traders, we don't move the markets. We just follow the big players, the banks, and people with the money. They move the markets. So what we saw here was price impulse nicely up, came down, was moving a bit around here, but we had this area of resistance thrown up here, and we knew we had to wait for this retest here before we could go long for our risk. Okay, yeah, for our risk entry. So now let me just add that, add the SMA. Then you can see here from this impulse here we threw a fob from the low here under up. We took the fob and we to the high. As you can see the node level, that's a swing high, and the one because we pulled it from down up, that's our swing low, and this is our swing high. So price came down a bit, came up a bit, played around, and tapped right into our resistance that became support, and that being this closer over, that became demand now. It became resistance and support. It became support here. So after the scandal here, the thing I do is I'll wait for the break of the moving average. This purple line here. This is the this is the SMA, yes, and this is the 14, I think. Let me just check. Yeah, this is the 14 SMA smooth moving average. I'll wait for the break and the retest. As I could see here, price was just sitting above here at this area. This was about 1 o'clock. So yeah, 1, 2, 3, and then we could have then we throw our we show this pattern form here. Let me just remove this Fibonacci and make this gold. This is a golden zone, right? A 618 level. Let's make it golden zone. 0.6 618. So this you have to start learning by heart also. So we knew that. So after price tapped in, we got our confirmation candle, a green one, and we broke here at the 1 o'clock hour. Also this impulse with this correction here forming here. This correction forming here, right? If we add that Fibonacci to the nature's theory also, then we knew that nature's theory telling us price moves impulsively up, then comes down, take a breath or correction, and the probability that price for continuing up is higher than selling again down. So what you want to do is, with nature's theory, you want to wait for price to be cheap to buy. So with the way we trade is, we will wait for our third touch of this flag pattern. It's important to learn your patterns also, forex, and then we'll wait for the impulse candle to break, and you will either take a breakout trade. Yeah, what the fuck, the signal is fucking up. So we'll wait for the breakout and take a breakout trade like that. See, positioning a stop loss, or we can wait for the retest of this trend line like that. Take a risk-free entry. See, so right, as you can see here, we had the nature's theory. We had that impulse what you saw. Then we had the correction. Then we're waiting for the impulse. So what I do is I will measure the impulse with a leg. Say this is my leg. I will pull out like that. That's my leg. Then I will measure it from in this pattern here. This pattern that formed here, this correction here. This correction. So you got the impulse and you got the correction. And you got the impulse out of this pattern. You see this line I drew here and this line I drew here. It's like a triangle pattern, as I could say. And that looking like this. You get higher lows and lower highs. See like that it looks. You get the lower highs. You get the higher lows and get your lower highs. So price is not trending because it's making higher lows. You see this high here is lower than the first one. Third one is lower than the second one. But this low here, the second one is higher than the first one, and the third one is higher than the second one. So that's a higher low. So then when price came here, and we throw the Fibonacci from here, and why is the fucking signal fucking up? Wi-Fi is fucked up.
If you like the video, guys, don't forget to like, subscribe, share, show the love.
There's a bit of a problem with the signal. The motherfucker don't wanna print. There it goes. Yeah, right, so we pulled it from this low. I got a lot of Fibonacci's here. Right, we pulled it from this low to that high. We got our rejection of our 618 level, this golden line here of the Fibonacci, as I showed you, at 618 level. Then we took a rush entry right here. Sis. This thing is fucking up, man. Signal is a bit bad. Sorry guys, my Wi-Fi signal is just demaka. But yeah, as you can see, then we would have entered right here a stop loss beneath the 38.1 level, but 28 pips, and I take profit. We'll put here by our always our second take profit extension level, acting as our second take profit. The negative 28 acts as your first take profit, and the 618 as the second one, right? And as you can see here, price moved up and broke the pattern, broke the trend line. You see, and we came back to retest the trend line. We got another entry, and price just shot up straight to our 618 level. That signal is missing me around, man. Yeah, as you can see, price moves straight to our negative 0.618 level. I take profit too. So, let me show you another example. So you buy maybe other pair, maybe gold. So you buy gold. Signal is so bad now. I don't know what the fuck is wrong with the signal. Alright guys, as I said, let's just go to other pair, gold. Let's actually trade them. You see, it's the same example, that pattern. Like a wedge type pattern. But I missed this trade. I wasn't on the charts at the time since yeah, let's just show you another one here. See, here's a nice one. I'm just cherry picking it here because to show you examples of it. I'll show you another one for uptrend. So here you can see we had a nice impulse. We had like a slight correction pattern forming, like a flag. As you can see, like a flag forming. Right, then we knew, okay, right, as we can see here, price impulse. Okay, yeah, you can draw it here actually also. There is entry, but as you can see here, price impulse nicely out the structure, came back, gave us another correction pattern. Nice correction pattern gave us, like that, right? Take this off here, make this bigger here, look at this bigger. Nice correction pattern like that. And then we can draw the flip from the swing low, which is a swing here. You see, price didn't trade any lower here, so this is a swing. You see, this one here is a swing because we got two highs on both sides, on the left side and on the right side. So that's making this a swing point. From this swing low to that swing high here, this candle here, because here we got two lower lows on the left side and two lower lows on the right side. And if we just drag this a bit over, like that, you can actually see this is the true example of it. So here there's some stipple lines going here through the Fibonacci retracement. This is the bounce you call. And you see where the bounce falls. The bounce falls here on the golden zone. In the golden zone between the 0.5 and the 0.618. This area here. This is a high probability area for the retracement. Remember, Fibonacci retracement means looking for entry points to continue the trend at the retracement. So price will move up, price will move straight up, price moves up, comes down a bit, retraces before going up and come down a bit, retraces before going up. So price goes up, come down a bit, retraces before going up, come down a bit, retraces, goes up a bit, retraces, goes up a bit, retraces, or corrects, whatever, same meaning, then goes up a bit. You see, so price never shoots all the way straight up. Price never shoots straight up like that. Price will always move like this. See, then move like that, but never will price move straight up. Depending on the volatility of the market, when price will move, you get that sharp moves, like one I quote yesterday on GBP JPY. That sell, damn, it's a nice sell, but okay. So you see the concept, and we got a nice rejection here at our golden zone, where resistance became support, another confluence with the moving averages and the trend. Because obviously in the higher time frame, you will see that we're trending up beyond gold. So if you took the buy here by the rejection, the fucking Wi-Fi signal is fucked up, man. Something is right. So if you took the trade from here, from this area, and you had to take profit here at the extension level 2, could you just place your stop here beneath the 0.5? So the Fibonacci level, Fibonacci retracement acts as a point where you can put your stop loss, also identify a better risk to reward ratio, or purchase to reward as I call it. But you can see here price move nicely out of this flag pattern. Gave us a small correction, then impulsed up straight to our negative 618 level. And there we go. Straight to our negative 618 level, right? So that's for trending up markets. You use the Fibonacci like that. So let me just check another nice one quick for selling opportunities. Okay, yeah, let's start somewhere here. And this is like clockwork. The Fibonacci, there's always opportunities. You can use it on all the time frames. And oh yeah, this is settings for it. To get the settings of the Fibonacci, you can just copy what I have, and this is it here. Then you go by style. Here by style, you will see. Here by trend line, I just have it like that. Here by the first box, I got the note. Second one is not ticked. Third one is ticked. And this is the note pin 38.2 level. That make purple. The note pin 5, I got blue. The note pin 618 level, the golden zone is yellow. Then the note pin 786 is green. The one level is black. Then here you get the extension levels. You see here you put negative 0.27 for take profit 1. For take profit 2, extension level 2 is negative 0.618. And only the side boxes is ticked, right? As you can see, not the side. This is for the PCUs. So that's a setting for the Fibonacci I use. So for a downtrend, it's the same concept, just vice versa, as you can say. But just remember, price can say you have a downtrend. The fuck is you know. So just remember, So for a downtrend, right, you pull from the top to the downside. For an uptrend, you pull from the swing low to the swing high. But say for instance, you got a downtrend and price can impulse down, right? And price can either reject the 38.1 level and go further down, or the 0.5 and go further down, or the 618 and go further down, or the 0.786 and go further down, right? So that levels is all the retracement levels. As you can see here, as I'm about to show you now, as you can see here clearly, we had the impulse move, then we wait for the retracement to take the sell further down. Then you can draw it from this high to that low, as you can see there, and you can see price just tapped into that, broke it, came up in retracement, rejected, came down, rejected, couldn't break, came down a bit, rejected with this candle, came down. As you can see, all those candles here, it's about from Friday to Monday, about 11 o'clock side here. You had a nice entry here. This price came up a bit, gave us a hammer candle. Gave us a nice hammer candle here. And the 3812 couldn't break further. All this sewing couldn't go further and break it. And here you could have taken a nice sell. Because you got the rejection at the 38.1 level. If you just go down to the 15 minute, you can utilize it for sniper entries. But here you could take the sell from this level and put your stop loss just here above this highs, above the 32.8 level, and above this highs, put stop loss, and the take profit you would have here way to our negative 0.618 level. And you can see prices move down and just continue down straight to our first take profit and to our second take profit. See, that's for downtrend. So let me just show you another one here. As you can see here, this is a trade that would have entered a nice Asian session trade where we formed support. See here, we formed a nice support. Price broke the support impulsively, but started coming up. And as it's coming up, through from that high to that. That's wrong. See, that's wrong. See how that come up? Extension levels so on top, but that's wrong. You must draw it from the swing high to the swing high to the swing low. I'm just going to 15 minutes and I'll show you, then you can see it better. Yeah, here we have it. Here's in the 15 minute. Yeah, you can utilize it for sniper entries to get a nice early entry and position yourself nicely in the market. So you pull from the swing high to that swing low. That swing high here, the highest point to that swing low. Then price retrace, and our support became a resistance. Yeah, with this week, just piercing through our moving average, just stepping straight into our golden zone, negative 618 line, this area here. And after we saw that, and we knew that our sell was confirmed, and we could have entered right after this candlestick here with the stop loss just above the golden zone and the take profit right to your negative 618 level or extension level, second extension level. And this is a nice, you can make it a nice 1 to 3 risk reward. So here on this trade you're risking 1% to make 3%. Sounds kind of worth it to me, depending on your risk appetite and how much you risk and your account size. You could have banked a nice profit here with 1,400 pips. As you can see, that's for downtrend, right? And just remember, always use your risk management, neutralize your risk reward to make your trade make sense and to make it profitable for the long run. So if you lose 1% on one trade and you lose another 1% on the next trade, but the third trade you win and it actually hits take profit, here till you're under and you gain 3%, then that two trades you lost is minus 2%. That one is for loss, right? And the one you win is 3% plus 3%, right? Then you're left with equals to, at the end of the day, you still walk away with 1% profitable to your equity. So that's the risk reward strategy. But I will elaborate more. Just comment if you want that videos and what you want to know. I can explain it all because I've been in the market quite a time. Not so long, but I have gained a lot of knowledge and skill. So I actually was learning literally day and night, 24/7. I had to go beast mode 2021, 2020. I'm still learning, you learn every day. So yeah, that's for downtrend. So right, here you can see again. Let me just show you another example, quick one. Just take this here. You put this here. See as price came down, price formed support. Traded up a bit till here. And you can see here, you could even pull out the Fibonacci. I just want to show you another one how you can utilize it on the 15 minute also. As you can see here, it becomes here you create support, price broke our support, right? Then we could have waited for a retest to enter, but you must always look left. But in this case, I'm just gonna show you. So here we just pull it from the high, right? From this wick. Oh shit, sorry man. Pull it from this high here where the move actually started. You see? And broke that support area. And broke the support area. The move started was here, man. Before it broke this area. So we put the foot from there. You see? To our swing low. Then we see the retracement fall on the area where support become resistant. So right, boop. Now we can just move some more better. See there, more better now. So here we go, we tap into the golden zone with it weak. And knowing this, knowing in the downtrend, group into the sell here and just ride the move down. You see here we came to our put it above this week here, yeah. And here we came straight to our take profit 1. See our negative 27 area. So if you would have had it here, and saw price come here, you must always be aware that price could reverse here, continue to move up, or reverse here, yeah, and go up. So if you saw this, depending on what time frame you monitor the market, you could have put your stop loss here, or you could have moved it to break even. See, doing that, you would have lose nothing on this trade, or you could have utilized it like this, and then you could have been a risk-free trade.